Coming up next on the Jeff Crilley Show, no one wants to pay more than their fair share in taxes. We'll be talking to two national tax experts, and they're going to teach us how to save a small fortune. Their journey just ahead.
Many are predicting that the worst is yet to come, which is unfortunate, said one person here. Until now, they've enjoyed the reputation of being the nation's icebox.
Watched a burglar in his home this morning by webcam.
As a journalist of over 25 years, stories are what make my world turn.
Reporting live from the Dallas newsroom tonight, Jeff Crilley, Fox 4 News.
But in 2008, I took the jump from my familiar life and started a PR firm from my home. We're talking about anyone with a camcorder like the one I'm using becomes a television network. We started slowly growing the company, and we now have over 100 clients, and we've branched into the world of live digital broadcasting. I now own 8 different TV studios and have a huge team. And the stories that I now get to share are sometimes the most important of my life. Life has a funny way of coming around full circle. This is the Jeff Crilley Show. I remember following the career of Jeff Bezos, and famously, Amazon lost a lot of money for a lot of years, and they, I'm sure, had great tax advice. And finally, when they decided to make some money, they just turned it on. But to talk more about tax strategy and why that can make such a difference in your bottom line, Jason Mollner and Don Rasmussen, they're both with Quartermaster Tax Management. Thanks for coming on the show.
Thank you very much, Jeff.
Very cool. Don, let's start with you. How you've been doing this for how long?
35 years.
35 years.
Yes, sir.
And when you first got into it, I mean, the tax law keeps changing every single year. You almost have to have advanced degrees to even read the thing. Did you discover that many of your clients were just paying way too much in taxes?
Yeah, absolutely. So, I've owned 3 CPA firms, and the reality is most CPAs do not advise when it comes to mitigating taxes. They're about compliance. And so their goal is to just make sure that you cross your T's and dot your I's. So we want to put a large focus, and have been a large focus for about 10 years, specifically on helping reduce tax liability.
Awesome. And Jason, what's one of the most overlooked things that small business owners avoid or neglect when it comes to taxes?
Well, it really depends on the industry. We work with a lot of companies that are in manufacturing and the medical industry. And one thing that they often overlook is the R&D tax credit. Lately, many are starting to hear all the news articles about the employee retention credit, but there's still many out there that have not looked into that either. And the ones that are expanding, we often see that they're not looking into cost segregation and other strategies to be able to reduce their cost of expansion. So there's quite a few things there.
So Don, let's talk about, let's say, chiropractors.
Yes,
are there R&D credits available for chiropractors?
Yeah, absolutely. There's actually a lot of chiropractors who do qualify, and they don't recognize it. They think it's more academic. The reality is, Jeff, that every time they see a patient, they do an exam or a re-exam. We consider that more the research part, and care plans and modalities are the development. So our goal is to educate doctors that they do qualify, and that we can walk them through that process to make sure that we have a proper study completed. Matter of fact, we even have 3 chiropractors on our staff. So
no kidding. Don, what other industries do you like to work with?
Yeah, great. So dental, fencing, manufacturing. We just did a compounding pharmacy this past weekend. So yeah, there are a lot of industries. We've done some technology companies. Actually, here in Dallas, we did a software AI technology company. Was it last year? And so that's really kind of our focus.
Jason, without naming the client, what's your favorite client story of somebody you saved a bunch of money for?
Well, I'll tell you, my most exciting story is when I got to visit a client that built combines, and I got to drive a one-of-a-kind, experimental, first-of-a-kind, multi-million-dollar combine out into a field. It made my day. They might have only been working on a small component of that, but oh my gosh, yeah. And just getting to know these businesses inside and out, what they do, how they do it, that's the most exciting part of every day that we work is learning about what they do.
Sure. We've got some just video of tax work and CPA work. Don, going back to you, are CPA firms accepting, or do they see you as an outsider?
Yeah, great question. Actually, that's our goal too, is to educate CPAs, because realizing and recognizing that most CPAs don't understand research and development credits. So most CPAs are just not familiar with research and development credits. And for the few that are, the reality is they have misinformation. They make assumptions. They've heard something, more of a rumor type scenario. And so they give bad advice to their clients.
So, Jason, when you guys come in to work with a new client, one of the first meetings, I'm assuming, is with their CPA.
It's an early meeting with the CPA. Part of the reason they need to get involved is we don't always know all the history of that client, the tax history of that client. And we want to make sure that we educate the CPA, because there may be other clients that they work with that they haven't thought about or haven't considered for the research credit or other opportunities. And that allows us to help them to continue to grow their practices and provide the best and service they could to their clients.
Sure. Don, when I think about R&D, I think about like a laboratory that you're experimenting, but that's not the case, is it?
No, absolutely not. So as an example I used earlier with the chiropractor, the day-to-day activities, the Monday through Friday, what they're doing, a lot of times will qualify. I want to go back to about the CPA thing. What we found is once we educate the CPAs, Jeff, they start referring their clients over to us, because they realize that this is an expertise. This is not a part-time opportunity to learn about R&D in a CE class, but this is a day in and day out. And Jason and our legal team there have done a remarkable job, because this is all they do. They don't do tax returns. They do the research on the R&D.
So you mentioned manufacturing. What's an example of an R&D credit for manufacturing?
Well, we just had one recently. It was fence manufacturing, which is very unusual, but it's very custom fencing, lots of welding and bending and plasm cutting and things such as that. So very unusual, but I mean, it could be anything down to manufacturing a widget of some type. So it really could vary. And I know Jason's had lots of opportunities to work in that space. So.
And even if somebody has neglected to deduct this in years past, you can actually go back in how many years?
So it depends, and you're going to hate my lawyer answers, I'm sure. But it usually, for most businesses, you can go back up to 3 years from the date a return was filed and amend that return to make a claim for credit. However, there's some cases where a company does not have any tax liability prior to that 3-year look-back period. And because of that, we don't have to amend a return to make a claim for refund. Those credits just carry forward from those back years. So a lot of companies that are just coming out of their startup phase, they've had losses as they're building up. Now they can go back all the way to the beginning or the founding of that business and carry all of those credits forward, going back up to 20 years instead of up to 3. To be able to carry all those credits forward. And that can be a huge phase. We talked about Amazon just to start this conversation. That is something that Amazon did. They had losses for over a decade, carried all those credits forward, all those losses forward from that whole history. And that's not just a tax strategy that the big boys can do. That's now a tax strategy that small businesses can do, and we can help them with that.
Sure. Don, I'm sure there's people watching this right now who say, well, gosh, I don't want to get audited. I don't want you guys to get overly creative. You guys never do risky deductions, do you?
No riskiness there. As a matter of fact, the law changed January 10th of last year, and it was that everything's pre-approved now, Jeff. So when we go to apply for a refund back for the research and development tax credits, we actually have to do all of our documentation, submit it to the IRS for their approval. They give us 60 days generally to say yes or no. And then again, we've been very, very successful in this year. We've not had any been told no. And so what that does, that reduces the chance of audit significantly because ultimately an audit is to prove a deduction or a credit. And so because this is done pre-approval now we've had to remove the majority of that ever happening. So I always tell clients, probably a 95% reduction just because they've reviewed it in the get-go. So
sure. Let's talk a little bit about the employee tax credit because, you hear these ads on the radio. For the person who is not familiar with it, what is the employee tax credit?
So the employee retention credit is a credit that covers 2020 and 2021. And in 2020, you can get up to $5,000 back per employee if you were subject to a shutdown order or if you had met certain revenue reduction requirements. In 2021, you can get up to $7,000 per employee, and it looks by quarter. So $7,000 in Q1, $7,000 in Q2, another $7,000 in Q3. So that's $21,000 from 21, another $5,000 from 2020. This total of $26,000 you can get for each employee. Again, if you're subject to certain shutdown orders or if you had a revenue reduction that meets those requirements.
Sure. Don, in general, if you applied and received PPP money, are you likely to qualify for this tax credit?
Yeah, so when it first came out in 2020, you weren't able to get both PPP and ERC. Yeah. That all changed at the latter part of 2020 when President Trump actually allowed that to happen. Now, we'll tell this, Jeff. As a matter of fact, the IRS has come out with 3 warnings. So there's a lot of promotion for ERC. You hear it on the news, on the TV, on the radio, Facebook, everywhere. And the problem is there's a lot of abuse out there. And so, we want to encourage everyone who's watching that making sure that you do qualify, because the IRS put a focus on audits, specifically on the abuses that are going on out there. As a matter of fact, they're going after these companies from a criminal standpoint, but for the person who's getting the credit, keep in mind, if you didn't qualify, that you have penalties and interest and pay back what was given. So
sure,
it's become a big problem. As a matter of fact, the Dirty Dozen just came out this past week, and it's number 1 on the Dirty Dozen from the IRS.
No kidding. And that's why it pays to go with a firm with integrity like yours. Let's talk about conferences, because we got some pictures where you guys are really are very active. You're attending conferences. You're getting the message out. You want to talk about that, Don?
Yeah, we did 81 conferences last year, Jeff. So our goal, of course, is to educate. So when we go to these and we travel all over the great United States, it's about educating doctors and professionals and businesses about what they're missing out on, not because their CPAs or their accountants are incompetent. It's more because they just don't know, because there's a lot in the tax code, and in R&D section 41 is a very specific specialty. So our goal is just to educate.
And are most business owners kind of shocked to learn that they've been paying too much in taxes?
Yeah. Yes, they are. No further elaboration there. They are.
Well, Jason told one of his favorite stories. Don, what's one of your favorite stories of saving somebody money?
Oh, yeah. Actually, just recently, I have a great client up in Maryland who has a very thriving practice. He happens to be a chiropractor. And we went there and did the study and came back with a very significant 6 figures, about $400-some-thousand, which I believe is one of our largest ones that we've seen for a individual practice like that. But, and I'll add to this here, that fencing company was very intriguing as well. I had the opportunity to go out there and visit their operation. And, you would never think that they're doing R&D, but the reality is, after our legal team took a look at it, that they did qualify. So, it's just neat to be able to go out there and have a conversation with business owners, giving them some hope that, they work very, very hard and they invest a lot of money. These folks are very good workers in our economy. They just didn't realize they were entitled to it, and it's unfortunate, but that they didn't. But now the good news is we found it for them, and they were referred to us by another client who wasn't in the fencing business but was actually a chiropractor. So
wow, that's wonderful. Jason?
I think that in the case of the fencing manufacturer, just to add to that, I think what helps a lot of these businesses to understand why and how they're eligible, even though they may not feel like they're in a white lab coat kind of industry, is to look at the history of that credit. So that credit was actually created in 1981. It was at a time that U.S. auto manufacturing was struggling against import auto manufacturers. And the U.S. wanted to try to create an incentive that would lower the cost of manufacturing in the United States. And they wanted to do it in a way that could get around World Trade Organization rules, which meant you can't specifically incentivize an industry in a way that allows them to export advantageously compared to other countries. So they created this research and development credit. But the whole idea behind it and the way that it's written, it's really an incentive for manufacturers, it's an incentive for software developers, an incentive for anybody who makes something. That could be a chiropractic technique, that could be a series of modalities that a chiropractor uses, that could be manufacturing a new widget, or just developing a new manufacturing process. It's written so broadly that ultimately, if you are in a business that makes something, there's likely an avenue to which you may be eligible.
Cool. Hey, Don, we've got a few minutes left, so give us some final thoughts. What are some things that you want the people to know before leaving?
Yeah, the biggest thing I always encourage you to do is to find out. We do the studies at no cost for those who reach out to us. Our goal is just to determine, so we do have a process, Jeff. It's a 3-step. Number one, just a call, just to find out if the requirements are met, the 4-part test that the IRS has, making sure there's enough opportunity for the client. And then from there, we get them on to a call with one of our legal team after we collect up some documentation, and then we come back and let them know if they're eligible for it. And if they're not, we'll tell them that, but we'll also give them the good news. So I would highly encourage them just to take advantage of the free study, and again, whatever industry. So we have a lot of dental labs. We're just in the process of completing one there in North Carolina, a dental lab, and so again, very significant. They're making I don't know, anywhere from dentures to crowns to false teeth. Everything. So, it's just neat to be able to find that this is funds we can get back from the IRS.
Outstanding. Okay, Jason, we'll give you the final word.
I want to encourage businesses when they're looking into this to also realize this is not something that takes a ton of time. We do the heavy lifting. We ask you for a few bits of information up front, some tax returns, some wage information, maybe a general ledger, and we ask you for maybe a 30-minute to an hour-long conversation. Once we've had a chance to review all of that, we can get back to a pretty accurate estimate. And to take it from the estimate to the final amount of the credit with the memorandum and everything might mean 1 or 2 additional calls. It might mean a couple of additional pieces of documentation you pull together. You're not looking at dozens and dozens of hours. You're looking at maybe 5 hours of your time. And when you think about it, if you're going to invest 5 hours of your time and potentially get back $50, $100, $150,000, I mean, you have to sell a lot of stuff in order to make that in your regular business. So it really comes out to be quite the incentive.
That's right. Yeah, and the last thing I was going to say, the neat thing about it, Jeff, is they don't have to change their CPA. Matter of fact, we don't want them to change their CPA. We'd rather work with them and their CPA to retrieve this money, recover it. So that's always a big concern. Do I have to move all my taxes over? Absolutely not. Matter of fact, we prefer you to stay right where you're at.
Outstanding. That's a great way to end this segment. And we're going to also end with your website, which is quartermastertax.com. Thank you both for coming on the show.
Thank you, Jeff.
That's it for now. We'll see you next time.